Hi everyone, it's John Galante, president of AE Ventures, and I'm here with another one in our Builder Innovator Bull Session series. Bull Sessions are short, informal, freewheeling discussions with a small group of players, and I have a couple of major players in what I'll call the professional services category here within the home building industry. I have Travis Rule with FBC Mortgage, who's the Chief Operating Officer, and I have Lowell Hayes, who's the President of Maverick Insurance. Let's just get a little bit of an introduction on your companies and yourselves for starters.
Perfect. Thanks for having us.
Yep.
So Maverick, we are the modern insurance solution for home builders, is in a nutshell. What that looks like is a team that focuses only on construction. It's one of the most unique risk industries that's out there. That specialization allows us to build a team of advisors who know this industry forwards and backwards. It allows us to have carrier partners who understand the risk that's in this business, and as a result of that, put together programs that are fundamentally better than what's in the market today.
Yep.
And then as part of that, we also believe technology is a critical part of the solution. And so we have a platform called Beacon that surrounds that entire experience of risk and helps with the administration, data and underwriting, and homeowner warranty experience that goes into risk.
Hold that thought. I want to dig in on that after we hear from Travis on himself and FBC.
Yeah, so Travis Ruley, Chief Operating Officer of FBC. FBC is a mortgage company that focuses, as part of our strategy, on home builders. We specialize in supporting home builder business, whether it's assisting and helping homes sell through strategies using mortgage as a tool, but also to providing services that exceed just the mortgage process from a B2B perspective. We are a retail, TPO, a consumer direct mortgage company, and have thousands or hundreds of products to offer just about every single borrower situation. I think that's so critical for a home builder, and especially in today's interest rate environment where when a person walks in your showroom, you need to have a mortgage product that could help that customer obtain a home.
Yeah, but you're really a specialist in many ways on the new construction home building market, right?
Yep. Yeah, we work with
a lot of
140 builders. Roughly.
And the relationships are
paramount.
But they run the gamut to joint venture level stuff, right? Where you're kind of a private label provider for the builder brand.
That's
right.
Correct. Yep. From joint ventures to MSAs, preferred lenders, et cetera. We do it all.
Cool. So the idea of having both of you here on this panel is that people don't typically think of digital transformation and tech when they think about insurance or financial services. Tell us more about that Beacon technology, why it exists, what kind of insurance it enables, and really what the benefits are for the builders.
Yeah, you're exactly right. It's probably one of the least tech-enabled industries that's out there. A couple of things that we've noticed as a company that's been in this space for about 30 years is that we have this super unique industry in that when we talk about general contractors, the business doesn't look like any other industry, and the main difference is we work through these giant trade contractor networks. And so when we talk about risk, the number one thing that you have to understand is that our risk as general contractors is not actually about the general contractor. It's about this entire ecosystem that happens on our job sites. It's about the trades that step on the job site. It's about the suppliers and their materials on the job site. That is a problem that is ripe for technology. And so one of the key things that our platform is enabling builders to do is to digitize the process of managing compliance, risk, insurance related to all of those people on your job site. We were really excited at IBS earlier this year to launch a module in our platform that can automate subcontractor insurance verification, uses some really cool things with artificial intelligence to verify the insurance documentation. And so we're continuing to do things like that, where previously builders were devoting a significant amount of administrative time to trying their best to protect themselves.
This is called Beacon,
This
right?
is called Beacon.
And what types of insurance does the builder need to verify in their subcontractor base? Is it health and safety sort of, OSHA sort of stuff? Is it errors and omission stuff? Tell me about that.
It really depends.
Yeah.
And frankly, usually most of this is pass through. And so most builders know this, but inside of your general liability policy, it's usually going to have a requirement that your subs are all insured, and it's going to have other requirements that you're listed as on the insurance policy of that sub that carry a certain amount of coverage. Usually details that your average builder isn't familiar with. And so what our system can allow you to do is have an automated, AI tool that can look at that policy. It actually knows what it's looking at and can make those determinations.
Yeah. Does it get into construction defects that might be a result of the subcontractor as well? I'm just
that
curious.
level of detail. Yeah.
I'm living in a condo building that has 10-year-old construction defect lawsuit in place. I was just curious about that. Not necessarily on that, but more on the being on the job site and the safety.
But the critical component is when you do have a construction defect issue, as a general contractor, you would like to be able to pull in those trades, right? Usually you can push your risk and liability down to your trade, but only if your trade had valid insurance with a reputable carrier and had sufficient coverage to deal with the issue.
Take me inside how the technology works. I mean, is this mobile-based, desktop-based? What's the kind of latency and speed? Those sorts of digital solution fundamentals.
Sure. So, at a high level, our Beacon platform, we call it the first operating system for construction risk. So it does a lot more than what I talked about. It also allows you to buy your policy online, manage your policy online, add endorsements, things like that. It allows you to issue and manage your whole homeowner warranty program through it. And so it's one web-based platform that builders can access. We have different tiers and capabilities based on subscription pricing. But mobile's a great point. A lot of the time, the activity you need to do, you don't realize you need to engage with your insurance until you're on a job site. And so it's available via the web app in the field and on your phone.
Cool. All right, well, we'll come back to you. Travis, give us the kind of fundamentals. And your previous role at FBC was Chief Technology Officer, right? Before you... Chief Strategy Officer. But you're a technology freak.
Yeah,
so
absolutely.
Talk to me about all the ways that you guys are innovating on the digital solution side of things with regard to FBC and mortgages.
So the mortgage process is really been, for the longest time, very linear and very, very manual. And it has really, in the last several years, become extremely advanced in technology, mainly borrower focused, where I think the industry is moving to now that the borrower experience has been improved so much with phone applications, which we have a very, very intuitive phone app that a customer could literally upload documents, interact with us through their phone. We've taken that a step further and said, okay, now that the customer has a really seamless experience, how do we make the manufacturing process more efficient? And that's where I think the last year and the next several years, that's where the focus is going to be in our business. Divorcing the linear thought process and now working to a more concurrent process and getting more out of a 24-hour cycle than person A touches it on day one, person B touches it on day two. And so that mobile experience not only just improves the borrower, now the loan officer could take an application from the phone, price a loan, lock a loan right there on their phone, and never have to run back to the office. And that's really helped our sales staff stay in the field.
So that's consumer experience sort of stuff, right?
Right.
Talk about integration with the builder as they embrace digital transformation and are trying to communicate more about affordability, facilitating at least a preliminary commitment to a transaction on an online interface. I mean, how do you guys play in that space and facilitate there?
So part one is we have the application for B2B, so they can see their pipeline, as well as we have the capability to hook into an operating system within a builder to provide high-level statuses, obviously without sharing sensitive information, but here's the status of this loan as it's moving through the manufacturing process. There's a flag for, hey, it's unlocked, but we see it being high risk as the rates start to rise, and so we're able to indicate risk early for the builder. And
so there's back-end insights for the builder as people are making these applications.
That's correct. And so all of our builders, one of the benefits of having a preferred lender or joint venture with FPC is the control and understanding of the pipeline, right? So they sell a home, they want to make sure that that sale actually happens.
Yeah.
And so how do we make that backlog experience, those pipeline calls, a little bit more efficient, rather than just getting.
Does that integrate in with CRMs that the builders are operating?
And so for us, because each builder has a different platform or a different, whether they've custom made or off
The most heterogeneous market on the planet.
We
That's
have
one
to
of
be.
its unique attributes and curses for us, right?
And so I think this advice plays for any technologist or anybody thinking through strategy is we had to configure the data and standardize it to where I could hook into platform A, B, or C, or D, and it's standardized to where it makes sense regardless of the interface or the connection to a builder A versus builder B. And that's where I think the hard work is, as we think about our business, because we all have fragmented value propositions. Well, how do you tie it all together? Well, there has to be some sort of standardization.
So enhanced value-added information for the builder on their pipeline, on status, on the credit worthiness of folks who are making initial applications and such. Talk about taking the friction out of the consumer buying process with regard, we talked a lot about this, is like we can all have links and get lost in link land, but you have the ability, or you're working on the ability with builders to really be more embedded and keep the buyer within their digital communications universe, right? While they tend to the mortgage needs.
Yeah. So we're positioning our experience. If you think about the mortgage process, it is really mechanical, right? Where we can skin our process, to make it feel like they're still with the builder's process throughout the entire experience on the builder side of things. Where not really. It's clear that there's an off ramp to a mortgage company, but it's a lot less. There's a lot less variance in the experience. So it seems like it is a seamless process. As I still shop the home and pick things out, I'm over here doing this mortgage process, and it's almost the exact same. And then I come back on to the builder process. And so, I think it's still a little early for builder adoption there, but the capability and our willingness to do that is we're ready. And so, we see it as a secondary value prop to keep that their customer experience continuous all the way throughout.
Right.
And we can continue to manufacture.
Right. So what about I'm sure you're very compliant and sensitive to the privacy needs on the consumer side of things, but there is ancillary information that can be derived about these buyers that can, at least in aggregate, be shared with builders to have more insight into extra credit availability and their universe of buyers and prospective buyers. There's maybe some other stuff there. Talk to me about that. And you're sharing some high-level insights. Am I giving away the story? I don't know.
Yeah, no, it's good. This is some of our secret sauce, and I think no, it's good. Our sophistication in the business intelligence side of things that can provide to a builder is, I think, bar none. We're way ahead of the pack in that sense. So to your point, I can organize and analyze data at a macro aggregate level to our builders and say, hey, look, for every 1/8% the interest rate goes up, you lose 1 1/8% of your buyer pool. And that's using automation to re-underwrite thousands and thousands of borrowers in this scenario profile based on a debt to income ratio.
Yeah.
So then we take that data. So how we would use that, we would display that and say, hey, builder, this is your customer base, and this is the effective interest rates. Well, if we do a forward commitment strategy, if you buy the rate down, 1.5%, you increase your buyer pool by roughly 15 to 18%. And then we can then quantify the additional sales that took place when they deploy that strategy.
So you can help them with financing strategy that really does affect sales. You can help them with forecasting as they're tracking some of these macroeconomic changes.
Yeah, we can forecast, harvest information off an appraisal to provide pricing strategy information. So we as the mortgage process, we are incredibly rich in the data sense, and for us to make a loan, we use certain elements of that data, but a lot of that data in most mortgage companies goes unused. And that's where we're taking that data and displaying it in a very intuitive way.
Yeah, I don't think many builders would think of their mortgage partner as a business intelligence resource, right? So that's pretty cool, pretty awesome.
Yep.
we're working together on that, kind of following the buyer on the longer journey, potentially being able to expand mortgages if they get the urge for impulse purchases after reviewing digital design center stuff, potentially enabling attachment sales if they want to furnish. Oh my God, buyers actually want to furnish the homes that they're moving into
Yeah.
and decorating. It was like, my theme is let's stop leaving money on the table. But you guys can help on that. You could help builders understand what the opportunity is, because there hasn't been a lot of understanding of what the additional credit availability is of those buyers. There's been a lot of third rail level fear around this stuff. Is like, don't do anything to blow the mortgage up, so don't try to sell them anything else. But the reality is there's a lot of additional credit available, at least in an aggregate basis, right?
Yeah, so we that's exactly right. So roughly, we talk about the effective interest rate and affordability, for people that need to buy a home. And then there's the other side of that conversation, who has additional capacity for more. And in both scenarios, there's opportunities for a consumer to, and I think there's three buckets. There's the person who has the cash to buy the furnishings. There's the person who's got available credit line to buy that furniture. And then there's the people who need additional financing to buy the furniture. Yeah. Right? It's that third bucket that we have to solve for. And traditionally through the mortgage process, and everyone that's listening to this has probably taken out a mortgage, and the loan officer says, do not buy a car. Don't take any debt out. Don't do anything through the mortgage process, or you're going to derail it. Well, what people don't understand is throughout the entire process, we're monitoring consumers for new debt anyway, and what we find is they still do it regardless after we tell them that. And so why not take a proactive stance? And we're building ways to say, hey, this borrower does have capacity. Go find a revolving credit card line. You can buy furnishings as long as it fits inside these terms, and making that a condition of the loan. Taking it even a step further, maybe in looking at revolving debt opportunities as well too. So it's a really different way of thinking about the transaction, but giving builders the ability to offer their customers that value proposition of what you see in the home is what you can buy. And by the way, you can get it at a discount, and you can use this credit facility to do it.
And that's happening at the same time that we know, and on our digital platforms, we have to show a home that looks like it can be lived in. We have to show the furniture and the decor along with the built-in finishes. And then we've got people, or they go to a model home and they want to buy it from us, but we tell them,
you can't.
Hell no.
Or wait till the mortgage is done and then go start over.
So next time I do one of these, I'm just going to have a stack of money on the table and say, let's not do this anymore. But there's a lot of understandable hesitation and a feeling of risk from what the tradition has been. But hopefully we could start to break the ice on that. Do you have any questions?
We'll make the money and we'll save the money. So
okay.
Together.
Do you have any questions for him? Because you're a student of technology and
yeah, it's really interesting. Honestly, I'm learning a lot right here. It's what's interesting, to kind of go down that path is we work mostly with, I'd say, a small, medium-sized builder, and you guys probably typically work with a larger builder. And
all sizes.
What is your perspective on, the future of mortgage builder partnerships, and how does technology play into that?
So I genuinely believe, and this is probably unpopular in the mortgage circle, I genuinely believe that in the next several years that mortgages will have to be made, obviously seller and buyer willing, on a purchase, have the ability to be made in 8 business days, which is legally fastest I can do for federal regulation, and then on a refinance, 11 days, essentially. That is going to become the norm in a few years. So if a mortgage company is not thinking about that, and that's to my point, borrower experience is important, but you better start studying your manufacturing line, because what's crazy is the technology exists today. It's adoption.
When you say manufacturing line, you mean manufacturing the mortgage in terms of going through all the compliance and information submission steps. Yeah.
And so my philosophy on that is how do we employ our customers and our staff? So I asked my team, how many employees do we have? And the common answer is they would just do the head count of our organization. Well, that's actually the wrong answer. The way we need to think about technology, our consumers should be thoughtfully employed through our process as well. How can we get them to self-serve? How can we get them to provide information? And then our mousetrap validates what they're providing. And so now, instead of having 900 employees, I have 15,000 employees closing a loan very fast. And I think that's the philosophical approach. And now putting all this together is where the art comes in. Incredible stack.
Yeah. Cool. Well, I think this has been a good starter. Maybe it's a little bit of a surprise how techie insurance and financial services can be, but it's just going to get more techie as we go forward. And it's good to know that there's more than just dollar signs and percentages associated with all of this stuff, right? Thank you guys so much for coming out today and having a
Thanks for having
discussion with
us.
us.
Yeah, thank you.